President Trump's policies promise an economic downturn. That according to UCLA Anderson forecast. Now you got to understand they've been doing forecasts since 1952. So let's call that, I don't know, almost 73 years or so. And this is the first time they have put out a forecast that puts America, the U.S. economy, on recession watch. I don't know how I feel about that. Because again, if we step back and we are adults about it, recessions are a normal part of our economic cycle. In fact, if you really want to have an honest and an adult conversation, recessions are really required, right? They clear out the underbrush. They allow, bad debt situations to go through bankruptcy to clean this up. They allow, capital to be deployed more effectively. We act like a recession is, this horrible thing. And again, there's always that running joke. Do you know the difference between a recession and a depression? A recession is when your neighbor is unemployed, and a depression is when you're unemployed. I get it. Being laid off and getting on unemployment and trying to find a new job, and all of those things suck at the individual level. But when we step back and look at the U.S. economy, would a recession, 2 negative quarters of GDP, be so bad? We have gone on a 4 or 5 year debt binge. We have so many companies that really are zombie companies. We have so much debt out there that just doesn't make sense. So again, UCLA Anderson forecast puts the U.S. economy on recession watch, the first time ever, and they've been forecasting since 1952. And again, I don't think a recession is the worst thing. In fact, I think a 6-month recession, a cleansing of the system is kind of like clearing out the underbrush of a forest fire, right? I don't know much about forest fires, certainly not my area of expertise. But there's all this talk about clearing out the underbrush so that when something bad comes, it doesn't become horrific. Makes logical sense to me. So again, recessions are normal. They happen every 8 to 13 years. And, maybe it's time. And frankly, a recession is a time to make great wealth. It is a time to buy assets from forced sellers. And it's not the boogeyman, right? It's a natural part of the system. So I don't know. I don't know how I feel. I don't like the idea of everyone kind of pushing this narrative like a recession is a death warrant. It's not. It's normal. It actually allows the system to heal. Right now, the U.S. economy has all of these little appendages that are frankly not healthy, but sucking nutrients. Now, a recession allows those things to be cut off. They fall off. And the being is much healthier without these little parasites. I don't know. I don't think a recession would be so bad, especially one that allowed, rates to come down, allowed the U.S. economy, the government to refi all this debt that we have for the year at better rates. It really could set us up for an amazing, 5 to 8 year run. So I just don't. I don't think a recession would be the worst thing. We haven't really had one, a declared one for quite a while. So, anyways. Let's talk about what's next. Let's talk about Fed Day. So it is Fed Day. There's going to be no rate hike or rate cut. The Fed's going to stay put, but they are doing their statement of economic indicators, often called a dot plot. I think there's going to be a lot to see in the dot plot. So remember, going into this, the Fed had 2 rate cuts as their expectation for 2025. The market currently is pricing in 2 plus a 50-50 chance of a third. Now, this is a big deal. This is a big deal. The Fed in their dot plot for rate expectations, they could do a couple of things. A, they could do nothing. B, they could signal that they fear economic weakness and add a third. They could do that. I don't think that's my base case, but they certainly could do that. We are at a very interesting time. I think far more likely is the Fed actually removes one rate cut. They take that second rate cut and they move it into 2026. Now, think about how the market is set up. The market is set up to basically 2.5 cuts. My guess this morning is that in about 7 hours or so, we're going to learn that the Fed only sees one rate cut in 2025. And let's not be mistaken, there is a chance that we see zero. And you know my stance, I've been saying since November of 24 that we are getting no cuts in 2025. So this is very important. After we look at their rate cut expectations, we're also going to have to look at what they're calling for GDP. I believe last time they did this, they called for 2.1. Do they still see that? Do they pull back a little? We'll see. What about unemployment? Do they still see it as a non-event? And then what will they think about inflation? That's important as well. You got to remember, consumers out there in the last couple of reports have taken inflation expectations up dramatically. That's a problem. Will the Fed do that as well? Or will they lower inflation expectations? So today's market moving data, I think, comes out at 2:00 Eastern, 11:00 Pacific. So I guess five hours from now, 4.5 hours. And it's going to be must watch, and we will certainly talk about it tomorrow. We did get an industrial production report yesterday after we recorded. It was actually a positive print. We haven't had a positive economic print for seemingly a couple of weeks. This one was positive. Industrial production was up 0.7. It was expected to be up 0.3, and last month was 0.3. So a significant move to the upside, which is a net positive. I saw yesterday on X or Twitter that the JFK files were released. Apparently 80,000 pages of formerly, redacted or whatever, top secret documents were released. 80,000 pages. Anything interesting in those pages? I haven't looked, and I certainly won't look at 80,000 pages. There's no chance. But if anybody's gone through it, let me know in the comments below what were the interesting things uncovered. Is there a smoking gun? Do we know who did it? Do we know not? Is there anything out there? I'd love to hear from others, because I'm certainly not reading 80,000 pages. Business outlook for the next 6 months continues to deteriorate. That according to the New York Fed. Again, I think this is just part of the process, right? We have an economy that has clearly been historically the last years depending on government spending. It's where the growth was, where the employment was. That can't last forever. We now see a need for the private sector to pick it up, but the private sector, the businesses, they're unsure right now of where to go, right? They feel a shifting landscape, and not a shifting landscape doesn't have to be bad. A shifting landscape could mean good things. You just got to get to the other side. Where is deregulation? Where is the profit opportunity in tariffs? Where is it profitable to invest? Where is it profitable to find other trading partners? Again, in an environment where the consumer is nervous, businesses are nervous, they don't do anything, right? I think everyone could benefit from a stronger foundation of rules of the road, but we're probably not going to get that for couple more months. I warned you. I did a video right after inauguration that the first 6 months were going to be like this, and we are in it. Good news, folks. We're about halfway through. We're about halfway through this 6 month, gyration. So I don't know about you, but time does fly. Looks like the All In podcast had Treasury Secretary Scott Bessent on, and I have not listened to it yet. I'll probably listen to that today on my run. But he's talking about one of the things I did see is the U.S. Sovereign Wealth Fund might include Freddie Mac and Fannie Mae. Right now, those two entities are under U.S. conservatorship. There is talk about them going back into the public domain. There's talk about now I read about them joining this, being a part of the Sovereign Wealth Fund. I don't know how I feel about any of those things, but you gotta remember that if they leave conservatorship, I would not assume that's a good thing for rates. I think a lot of people, some very high-ranking people believe that if Freddie Mac and Fannie Mae were to leave conservatorship, that interest rates would fall. Now, they certainly could, but that would not be my bet. That would not be my bet. My bet is, at least in the short term being 12 months, maybe 18 months, rates would go higher. Also, there's a chance that what is the top level amount? I think it's in high dollar amount areas, it's $824,000 or something. I think there's a chance that the rules of the road change for mortgage. Guys, right now being under conservatorship gives them some flexibility. If they're for-profit entities, expect mortgage to change. Maybe for the better, probably for the worse, in my opinion. It's Wednesday, so we got mortgage demand data. Mortgage demand pulled back in totality. Refi demand was down 13% week on week, but up 70% year on year. Purchase demand up only slightly, 0.1%, but up 6% year on year. So interesting times. We are in the spring selling season, as we talked about yesterday for Mike Simonson. Inventory is building. Also, something about mortgage applications. Just remember, an application does not equal a successful closing. I think we learned yesterday that 41% of refi applications are declined. That's like 2 in 5. So again, remember that. More and more feedback, more and more people talking about Chamath Palihapitiya, talking about the redistribution of wealth, talking about business owners, stocks, real estate, non-traditional assets, seeing wealth being redistributed. I've thought a lot about this, and it's certainly a sexy headline. It'll certainly get clicks. But when I step back and look at the bigger picture, all recessions, every recession has a reset in asset prices. That's what recessions do. Recessions reset asset prices. Businesses are worth less. Stocks are worth less. Non-traditional assets worth less. But that's okay. If you're not a seller, who cares? You just wait for the business cycle to come back. I don't know. I just think it's interesting to watch. What else do we got? Oh, buy the dip. Looks like the traditional retail investor is not buying the dip. In fact, in the last 2 weeks, $4 billion in retail outflows. So it seems like the buy the dip strategy is no longer in charge. In fact, according to Rob Austin, director of research at All Right Solutions, data provider for stocks and all that, we're seeing retail sell large cap equities, and they would be buying them if they were being buy the dip. Recession fears are officially back at 2022 levels, and they probably should be. Again, recession fears certainly does not equal a recession. In fact, my call from a couple of years ago about a rolling recession is looking more and more likely, in my opinion. Again, and we won't see it called a rolling recession for the next 5 to 10 years. It'll end up in the textbooks. No one will call it that for a while. That's what a rolling recession is. I don't know if you saw this, but apparently the 12 of the 50 largest real estate markets are now negative on price. In fairness, most of those are still Florida and Texas, but again, it makes a great headline. 12 of the largest 50 real estate markets are now negative year on year, again, concentrated in Florida and Texas. CNBC Fed survey, 36% chance of a recession. That was in their latest March survey. That's up from 23%. So again, going the wrong direction. I don't know if you guys saw this yesterday, but I saw little notes about maybe the Russia-Ukraine war is coming to an end. One could hope that the loss of life is stopping and peace is restored. Again, don't know if that's true or if that's coming, but we should all hope it is. Zillow update. Zillow expects existing home sales to only be 4.1 million in 2025. Folks, my call is sub 4 million. Again, I believe 2025 will be the last hard year. I believe 26 will be better. What do I mean by that? I simply mean that in 2026, you won't sell sub 4 million. You'll sell 4.2. And then 2027, you'll sell 4.4, whatever that is. It just gets better. And it gets better for 5 to 8 years. So if you're in the game, if you're paid on a drip from the transactions, buckle up. You're 9 months left in 2025. So that's good. And it gets better from here. So hopefully that is good news. Folks, at the end of the day, it is Fed day. It will be market moving. If I had to guess, I think I'll do this. I like making calls. You know that. I think I'm going to guess in the dot plot that the Fed takes their 2 2025 rate cuts down to 1. I think they're going to slow walk this thing to 0 cuts in 2025. I think removing both cuts from 2025 would be too much too soon. It would send the market into a wild tizzy. So I think they're going to pull back to 1 cut. Let me know in your comments, what do you think will happen? I know we'll talk about it tomorrow. I hope you guys have an amazing day. Don't forget to join School with 360 other amazing folks, 6 different masterminds, accountability groups, thousands of dollars in education, places to ask your questions, safe place. And it's only 67 pennies a day. Take care. Later.